Okay, today we have the one and only Tavi Costa and some of the best, I think, macroeconomic or precious metals charts and research and kind of unique and interesting things that I found so far across the internet. And as a time of recording this, it's January 15th on Friday, and we've had a big pullback in the price, at least the silver, maybe 2% last time I looked. Gold was starting to make its way a little bit back down towards the floor a little bit. And so I think it's a perfect time to have someone like you on that's such a fantastic researcher and has really been a thought leader for precious metals. And I think this is a time when, to hear from someone like you is important. So first of all, just want to remind everyone to hit the like button on this side right over there, this side right over there, to send it out to more people. And we have Tavi's website in the description right there down below. And just want to say a special thank you to our channel sponsor, which is Vizsla Resources, one of my favorite silver and gold stocks. So thank you, Vizsla Resources, and welcome, Tavi.
Hey, Jake, thanks for having me. I look forward to talking to you today. It's days like today that we live for to really bet on what we believe. And I'm happy to be here to talk to you, and thanks for having me. By the way, big fan of Vizsla as well. I like Mike. And anyways, thanks for having me and look forward to this conversation.
Oh, cool. Right on. Yeah, I really like Mike a lot, like just as a person, really interesting guy. He read Think and Grow Rich book too, and had all these financial goals he wrote in his 20s. So he's a pretty interesting guy. And they're actually our brand new sponsor. They'll be our official channel sponsor, kind of like only the second or third where I've announced that. So I'm pretty excited about that. But and Mike will like to hear that. But anyway, so let's talk about what's happening as of today and kind of the last while. We had that amazing run from spring into summer, and it was kind of like what was happening to Bitcoin pretty recently, where everyone was piling, everyone was getting so excited. They thought the price was going to go up forever. And we've had a pretty nasty consolidation and correction for a while now that is driving a lot of people out the doors, it seems. So what do you believe is the reasons behind the struggling price right now in precious metals, where it seems all the macro factors are in its favor?
Look, I think it was a sort of overdue of a move in the dollar personally. That is, something we also are positioned at Crash Capital. We think we're in the race to the bottom of all fiat currencies, but we actually think that the dollar is fundamentally stronger than most other currencies worldwide. So, I think that's part of the move. Narratives have changed so much over the last few months, and from rates going up will hurt gold. And, most people in that camp likely have not studied what happened in the 70s. It wasn't about rates moving up. It was about real rates moving down because of inflation expectation rising faster than nominal rates. Then we had the vaccine changes, for the folks in that camp still, the vaccine won't change anything regarding the long-term problem that has been exacerbated since the pandemic started, which in my view is this massive growth of debt relative to GDP. I always ask that question, where could we be wrong in our thesis? And where I think we could be wrong is if we do start seeing organic growth in the economy that has nothing to do with monetary and fiscal stimulus. Now, clearly that's not the case here. Clearly what we're seeing is further monetary policy. We're seeing a democratic sweep recently. We've seen Janet Yellen is back. We've seen Bernie Sanders is also in place. We've seen the IMF call for the Great Reset. The Federal Reserve saying it's not even thinking to raise rates. Unlimited QE. It's sort of crazy to me that even silver is still trades sub $30 an ounce. So for me, it's an opportunity. It's hard to believe that we are starting now, 2021, at $27 trillion of public debt, with deficits and twin deficits very close to 25% or so relative to GDP. And I think that's only going to continue to get worse. And helicopter money policies will continue to go on. At what point the silver and gold, Bitcoin seems to be catching on to some of that, not today, but recently. And you're absolutely right. We did see a move that looked like the Bitcoin move back in July. It wasn't a move I was happy for it. I wanted to see silver moving up. I thought silver and gold would be moving up, but not in this unsustainable sort of way where it's up almost every day, 5-7%. That's not sustainable. And that's sort of what we're seeing in Bitcoin too. So I think we all here to see more of a sustainable long-term move towards this bullish cycle for precious metals. And hopefully, I really think this is just a consolidation period for any investor out there. What we are doing at least is continue to raise money and put it on those, properties that we do believe, Vizsla being an example, and so many others that we have in our portfolio that we believe will deliver in terms of being those prolific deposits that we think they are. So there's a lot of opportunities out there in my view. And days like today is just a reminder of the big picture. Step out, zoom out, look at the big picture. Gold and silver still extremely low relative to money supply, the monetary base, the equity markets. There's so many ways you can look at gold and silver in relative terms, in racial terms, that still look absurdly cheap. And in my view is, we're at the beginning of a bull case here for gold and silver that will last another a couple of years here ahead of. I think it would last at least 5 to 10 years, but let's just say a couple of years from now on that will go on into this.
So, what do you think nobody knows for certain, but what is your speculation as to what has kept the price of metals in this range for what seems a lot longer than expected, especially watching Bitcoin now move while metals weren't, seeing a lot of various commodities moving? Do you think, what is your speculation as to why? And do you think that they need to have these new stimulus starting to be passed? What is your expectation on what will get it moving again as well?
I think the market is always looking ahead, and sentiment got a little bit ahead of itself here too. It's not contrarian. You talk to people on the streets, you can talk about gold, silver, and Bitcoin especially, and most people will probably agree with you. It will probably say, "Yeah, I'm on board with that." I think the imprudence in terms of the monetary and fiscal side of things have gotten out of control. And that doesn't mean that this narrative will completely affect this trade going forward. I think it's an investment thesis that will still play out going forward. It's always the most relevant chart in the world today is to look at commodities to the equity ratio and step back and say, look, this is still the case. This imbalance historically is still here. And what are the best ways to really, implement this trade going forward? Now, I think it's also, it's not only gold and silver. There are other commodities that will benefit from this. There is a supply shortage problem of the commodity space that will be a problem in the following years here. And markets might start even pricing that in very soon. We saw a commodities move recently, as you probably saw myself pointing out, a 12-year breakout in commodities index recently. That is an inflection point for inflation, in my view, that we haven't seen yet in a big way. And I know that we have seen in asset prices, life standards, still the price of living is still high. And there's a lot of measurements that are manipulated by the government. But the real inflation that I'm talking about hasn't come yet because of one thing. Commodity prices have done nothing but gone lower in the last decade. I think that's about to change. I think we're at the beginning of that change, especially given this supercharged environment that we are in, given that the Federal Reserve is forced to suppress rates, and by doing that through expanding its monetary base, and therefore it creates a supercharged environment for alternatives of the monetary system. That's gold, silver, Bitcoin will fall into that category. And partially, yes, that was, there was, I don't think that mathematically speaking, looking at the flows towards Bitcoin explains only about 10% of the downward move on gold and silver. And that's just looking at the market cap of gold, the market cap of silver. By market cap, I mean the value above ground relative to what's the actual market cap of Bitcoin today. And looking at the flows of the two, in a perfect world, for every person that sold gold to buy Bitcoin, that would explain about a 10% drawdown in gold recently. And, maybe, or I'm sorry, 10% of that move. And so, I think it has something to do with that, with this speculation mode that we are in, this euphoria that we're in the markets, where people are still looking for, fast money. And that's not gold. Gold is not fast money. We build wealth over time. And the potential for high returns is in other things like properties in the ground with gold and silver in the ground. I think that those have the higher potential of the return like Bitcoin, the returns of like the crypto assets that we see. But answering your question is very tough, because I think partially was rates. I think real rates had a different move that sort of went away from as being a driver back in August, especially. So real rates, instead of moving lower, began to move a little bit higher. I think that was one reason. But now recently we're seeing inflation expectation breaking out as well. And yes, nominal rates are moving up. And I think the Federal Reserve is running a live experiment that is looking at nominal rates and seeing how much can it rise before we start seeing trouble in the equity markets. And that's my view on this. And I think at some point, if we do have a sell-off of 15, 20% in the equity market, immediately they would come in and start buying, bonds, again, the treasury market again, even at a higher pace that they have been doing already. And that will have an impact on nominal rates relative to inflation expectation. That's a way to look at real rates continue to decline. But I think, we're likely to see that as a driver again. We're likely to see real rates continue to dip lower, driven mostly by inflation expectation. For the people that say it has gone too low already, look at what happened in the 70s when we got as low as minus 5% or so twice during that time, and really drove gold prices higher. So I think that was the biggest reason, would be real rates at the time. But watch out for those narratives. The bearish narratives will come in and out all the time. And the gold investors that do well in the cycle are the ones that buy the pullbacks, that buy the dip. I think that's the time here. We've had a lot of a very solid bull case for gold here. And I am a buyer of every dip that I can buy. If I have cash available, I will be buying it, even in today's levels. I think it's incredibly attractive, and we're headed a lot higher than where we are today.
So you said that you think the Federal Reserve is running an experiment and seeing how long, and I had seen someone else say that 20% they'd step in. Do you anticipate rates continuing to go lower in 2021? And what are your predictions for the primary themes we can see financially from the government and the Federal Reserve and central banks in 2021?
Look, I think that rates, in the U.S. Treasury markets is it will depend on the way that the Federal Reserve wants to fund its debt, meaning the monetary policy is becoming or it has become a funding tool for the government. So it allows the government to pile on debt while the Federal Reserve buys it, i.e. monetary debasement and 101 or monetization of debt first and foremost, and that causes monetary debasement. So I think fiscal profligacy is here to stay. As I said, helicopter money is already taking off and probably won't stop anytime soon. And what are the themes I had? The themes I had are hard assets, and hard assets that have some sort of a rare aspect to it. And certainly gold and silver from a supply perspective already look attractive. I mean, how many times in history do we see production falling for silver while we have a 50% move in a year on prices? Probably never. That's because of a pandemic problem too. And because miners have been reluctant to spend capital, and this is happening across the entire industry of the mining space, of capex cycle being diverging from metal prices. In other words, spending less while metal prices are rising. Why is that? It's because they tend to be optimistic at gold as gold and metal prices rise and tend to spend more money. Well, the reason for that is because they have been capital destroyers, and because of that, their reputation has been destroyed, and so they have to be somewhat capital conservative now, and they have been doing that. And I think a lot of people are missing that. GDX, for instance, has underperformed gold in 2020. And one reason is skepticism among investors. So you asked me, what are the themes and what we're going to see? Rates is a tough one for me. I think the play in the interest rates today is a play that we did back in 2018, in my view, that is kind of interesting, which is betting on the convergence of interest rates between the US and other rates across the globe. So in other words, German bonds, I think that the Germany 10-year rates will probably rise faster. So the rates that are already negative in nominal terms, I think are likely to rise faster than the US rates. And I think that trade worked really well. I don't think factually that trade worked really well in 2018 and beginning of 2019. I think it can work again now, as it has gone against not us, because we're not positioned on that anymore, but we're thinking about putting that trade back on as a spread tends to narrow as we get into a more problematic times here, economically speaking, in the US. So I think, it's tough to say how much rates could rise, but I find it difficult that they will get out of control, given what the Federal Reserve knows that, what justifies record valuations in the equity market, in the real estate market, in the corporate bond market, you name it, is rates. And it's one of the factors. And they can't allow that to happen. Otherwise, things are going to collapse. And so that goes back to my thesis of buy gold and sell stocks, is because I don't know what the Federal Reserve is up to. But my guess is that they're going to keep printing money. They're going to keep doing what they're doing, diluting the monetary base. And by doing that, I think that we're going to see those alternatives of the monetary system as assets such as gold and silver continue to rise. And I think that if we don't see that for whatever reason, for inflationary forces picking up or so, I think that, we may see a collapse of the equity market. So, I don't know which one is going to happen first, but I think there are asymmetric ways to be positioned in the downturn of the equity market and be completely positioned fully underlying that gold and silver will continue to move higher. So, when you look at what the Federal Reserve said recently, which is, look, we're not going to start raising rates until we see inflation go up above 2% for a full year, right? That's what they said yesterday. I think Clarita said that yesterday. Well, look at the PCE, number, which is their favored measurement for inflation. That only happened for a full year in 2005 all the way to 2007. Well, guess what? They raised rates during that time, and that popped the housing bubble. I'm sure they are fully aware of that. And the other time that happened in history was all the way from the 60s all the way to the 90s. Was a period of where inflation was running above 2% for a full year during the entire those entire decades. So I think that's that tells you that the Fed is being forced to run the economy hot while we have supply shortages in the commodity side. So where is my take? I think that commodities to equity ratio will begin to turn to the upside. What moves that? I still think it's gold and silver related to some other commodities. Oil is a commodity that may go from a worst performing asset in 2020 to perhaps one of the best performing assets in 2021. But my bet, high conviction is much higher in precious metals. Sorry, long answer, and I apologize for going over that.
No, it's fantastic. I heard someone argue one time that essentially letting the rates get too high and basically allowing the markets to collapse is a national security. They would view it as a national security threat. Between the amount of people that rely on it for retirement and just everything, of course, the tax dollars, everything. And so I can't see that occurring. And I thought that was an interesting analogy. So I'm with you on that. What do you believe the future looks like? So we've got this world right now where, of course, there's an overwhelming amount of people that quite literally across the world don't have a job anymore. The UN, United Nations, said that they estimate over 250 million people will be pushed back into poverty from the lockdowns. You now have a total splitting of Western society, really. Basically, that's been split politically. And you basically don't have a resolution to any of it, especially at the economic component. You've got this incredible debt. Never in history has there been debt like this. And if you look back at, history and you look at empires and just general cycles of history, there's not one sign that exists right now that didn't end in total collapse of either empires or civilizations in the past. And we're in this very weird situation right now coming into 2021 where they've got to do a lot quick because there's 8-hour food banks all across America and every major city. What do you think the future looks like? When you're very introspective, you're a big researcher, and you spend a lot of time. See, everything I just said is what brings me to precious metals, that macro, the future, and especially holding my physical bullion component. But what do you think the future looks like when you look back at 2021, at 2022, at 2023? Where do you think we go from here, and what is your personal viewpoints on how the future will look for us?
Yeah, look, I think what we have, and I try to look back throughout history and see if there is any analog to what we're seeing today. And unfortunately, there isn't a perfect one, but there are a lot of ones that you can use throughout other decades that we saw parts of that look very, very similar to today. Number one, in the economy side, the depressed fundamentals that we have certainly look very much like what we saw during the Great Depression. And I think still that's the case. Sure, a lot of things have gone up recently in terms of the macro indicators from the pandemic lows, regardless if it is unemployment rate getting better or some other things. But the number still is it's terrible. It's at the lowest. It's just as bad as it was at the lows of 2008 in terms of how bad it is. And economic activity is bad. You got industrial capacity being low. The only reason why this does not look a lot worse is because of, and I don't mean this to say that what they did is save the economy, but the only reason why we're not seeing what we saw during the Great Depression in terms of the issues on the streets is because of the helicopter money policies, because of money printing, is because of what we had so far. But that only exacerbates the inequality issue and some other problems that we may have along the way. It's important to go back also to 1919 during the pandemic of the Spanish flu. And during that time, what we saw was also a time when commodities became rare. And And even worse than that, first we saw inflation accelerating again during that period because of commodity prices begin to rise, not because of aggregate demand, because of supply that was actually being a shortage of supply. And what we saw after that was actually protests of labor markets in general here in the U.S. And I think that's does that sound familiar? Yeah, it does sound familiar. We're seeing a lot of that today. And unfortunately, I don't think it's the end of the world. I don't think we're going to go through a situation like that, apocalyptic kind of scenario. But I do think that we're due for something bad in terms of the equity market, corporate bonds. All of that it cannot last in certain way. And also, I think this dependency on central banks, which is a very strong narrative today among investors, it cannot last forever. So what's my view is what is going to look like at some point, there is going to be something that limits central banks from doing what they're doing. And I can only find one reason for that, and that reason is perhaps not even inequality, but it's actually has to do with inflation. When inflation really begins to rise in a way that they cannot anymore mask, through CPI or PC, whatever you call it, that they use to manipulate those gauges. I think we're going to start seeing issues with the monetary policy where they're not able anymore to expand the monetary base. They're not able anymore to reduce rates, and cost of capital is going to rise. As cost of capital rises, you begin to see a much tougher environment for corporations to start their businesses. Corporations that are levered, that, by the way, in America, if we look at corporations today in the public world, they have never been so levered in history. And yeah, that makes sense. Well, cost of debt is cheap. But at the same time, at what point do we see, GDP having to grow at 4% just to pay interest on the debt? We're going to go there very soon. We're very close to that already. Now, 10-year yields go up to, the levels. In the last 2 months, we saw the largest issuance of 10-year and 10-year yields in history. I believe I checked that yesterday. That's crazy. So in other words, as rates are moving up, they're issuing debt and they're paying down that debt. The interest rate payment is increasing over time. Right now, most of the debt in the U.S. right now was paid during the pandemic through tips. So they issue a ton of tips, which are very short-term maturity bonds. But that's not going to last long. They can't just keep rolling that. They're doing exactly what I thought they're going to do, which is start issuing long-term debt. And that's moving. How much of the Federal Reserve is actually buying of that? About 28%. How much do you think that are foreigners buying it? Not much either. So this type of issuance, either the Federal Reserve is going to come in and buy those treasuries in a huge way, or rates are going to move up. So you can tell now by looking at the situation, the Federal Reserve is hamstrung. They're beginning to get that limited. That's why I say they're running a live experiment that the market has no idea right now. So they're seeing how much they can, what is the lowest amount of purchases they can do in order to not cause a total collapse. And you're absolutely right. It is a national defense a situation to not allow the market to collapse. And at some point, unfortunately, that will happen because it always happens. It's cycles, business cycles, booms and busts. It always happens. And it's going to happen at some point. The question is just when. It's tough to say how the world is going to look like, but I do think that those expectations of equity market returns are not going to look like the way they look like in the last 10 years. I think they're going to look a lot different. And I think, back in the days, people would talk about investments. They would talk about how much corn went up, how much wheat went up, how much gold went up. We don't talk about that. We talk about Amazon. We talk about all those tech names, those sexy tech names, and all. I think that's about to change. Why? Because I can't see a world where those high duration assets continue to outperform in an environment that we're probably going to see, which is a reckoning macro environment going forward. So it's going to be a bumpy road. It's going to be a bumpy road with protests. It's going to be a bumpy road with extreme interventionism from the government, even more than we've seen so far. I mean, If I told you that we would be giving $2,000 to people today in America a year ago, you probably would think there's no way. Now, I I thought it would be possible, but not in the degree that we're seeing now. We're seeing politicians throw trillions and trillions of dollars as a way of increasing the budget every day now. I mean, it's absurd. How does that all end? No, it ends in a way where, unfortunately, it creates inflation. At the same time as everyone else is focusing on money velocity as being a deflationary trend, or at the same time as people are talking about aging population being a deflationary trend, forget about that. When you start seeing inflation on commodities, the game is over. That's the game over. So I think that we're very close to that, and that's going to cause an inflection point from the macro perspective. That I think we're pretty close. In the next 3 years, will look very different than the past 3 years. We haven't seen many changes in the past decade. I think the next decade will look very, very different in terms of returns of equities and returns of commodities in general.
So I was going to ask you about that inflation, deflation, and, I had Jim Rickards on. You know who Jim Rickards is?
Yeah, I do. Yeah,
I had Jim on last week, and Jim was, basically saying that people who think inflation is going to happen are like really wrong. And him and Peter Schiff, even though I don't know if you caught their video of them, it was pretty funny. They didn't get along too well in their conversation because they're arguing different sides of the same thing, and they had different definitions of what it was. And there's a lot of people that think the deflationary trend is so strong that we won't get inflation. And you're saying you think the indicators for that are commodities, and you expect that trend to continue?
Yeah, look, let's just think this through. If you have oil prices for supply issues, I was just talking to someone who was running a company, and they're saying, I can't mention the company, but they're saying that they're looking at spending about $1 billion of exploration in 2020 for their oil business, and that was their budget, and ended up being only $100 million. And that number is going to fall to 50 million now next year. So, that's the degree of lack of exploration and discoveries that we're seeing in commodities in general. And if you have, who cares about money velocity? If let's just say in a crazy world, which, as we all know, when the system is so levered, we tend to see wars. And it doesn't mean it's the end of the world either, but it means disruptions in the supply logistics and all that. I think that, if there's anything related to that, just to add to the problem here, and we have, let's say, oil prices way above $100 a barrel. Now, how does that change the whole inflationary world? It does change. It changes in a huge way. Look at construction, materials right now going up, in places like, especially, I was just in Brazil now. My parents are building a home in Brazil now, and construction and materials are up in a crazy amount. Like the price of some of the things are up over 200% already since the pandemic started. So, all that is happening right now. It's not because demand is booming. It's because supply is short. Industrial capacity is low relative to what the economy should be running at. So, and I think that that's a bigger problem. And if that exacerbates by investors realizing that, which I think they are, and start really flocking into those hard assets, I think we're going to start seeing issues. So, for me, the argument that some more deflationists talk about, which is that especially this scarcity of dollars outside of the U.S., I actually buy into that thesis quite a lot. Even though what we saw in 2020 was, a massive amount of expansion in the monetary system relative to other places worldwide, it's why we saw this decline in the dollar. But, can that continue? I think that other places will do just as much. It's just a matter of time. And so I actually like the dollar trade. I think it's a very asymmetric bet. For instance, the Hong Kong dollar DPAG or the yuan devaluation. I like those trades. They don't cost much. They cost 1-2% premium in your portfolio. That's an insurance. What if that the whole thesis is right? You could gain a whole year because of that, getting that right. So I buy into that thesis. What I don't buy into is that those long-term deflationary forces, regardless if it is the amount of debt that hurts consumers, that is all true. But at some point, you start seeing, you start realizing inflation is the only way out. And I think that it's going to be it. I think this time around, given what we saw in terms of the fiscal stimulus, we're going to see inflationary forces picking up significantly in the next few months.
So if we get you use the word inflation a lot, and if we get it in varying degrees, right? There's the one camp that says this is going to end in Weimar Germany type of situation, right, where you're talking legitimate, real, destructive hyperinflation that can cause a major collapse. Then there's people that are in the camp of we'll get inflation and it'll be bad, and it'll obviously, any inflation, especially for someone who's on a fixed or low income, can be life ruining. But something that's something that we've seen before here in America, right? Where do you fall in the camp on that, first of all? Before I move into my next iteration of the question?
Well, it's a good question. And I think the gold bugs are going to hate me now. But what I think, it's the developed economies don't have, the political environment looks terrible in the U.S. But compared to, I'm from Brazil. Compared to a place like Brazil, you cannot compare. It's just the level of corruption is to another level relative to here. And so, and that's not to say China or Argentina or Venezuela. And, that's just, it's a very different environment. And unfortunately, I think there's a lack of knowledge of either living in those places or understanding how they operate by comparing the U.S. with that. And unfortunately, that's not the case. And by seeing the decay, the problems along the political issues, what happens is that the smart money begins to leave. And when you start seeing the smart money leaving the country, that's what causes the capital outflows, and capital outflows causes the destruction of the currency, the local currency. That's what usually we see in those emerging markets. In the U.S., you got to think about what's the alternative. Where else would you go? Would you go to China and build your business? So the smart money doesn't have an option to go elsewhere. And so can it go to Australia or Canada and begin? Sure, you can see some of that. And perhaps that's being priced in the dollar now with the decline in the dollar recently. But no, I don't think that's going to be the degree that we see in other places like Brazil, for instance, like we saw in the 90s, or Argentina now that looks like a lot like Venezuela 5 years ago. Venezuela or Turkey, those places, certainly the smart money is gone. As soon as you see some issues, it's gone. It's gone. So, I think it's tough to make a call on that in the U.S. I don't think we're going to see the Germany style inflationary period that we saw back in the days in the early period of the last century. But hey, that could be the case. I don't think that's my base case scenario. I think that's going to depend on the level of destruction on the political side. If we do see the political side completely falling apart, then I think companies will get out of the way, and that's going to cause capital outflows, and it creates a destruction of the monetary system. But I find it hard to believe that would happen. So I stand firm on my call that the dollar still looks stronger than let's say the Chinese yuan or let's say the Hong Kong dollar. I think those places have been manipulated for so many years in terms of the currency flows in those areas that I think that those pose much greater risks than the actual dollar. That's not to say that the political environment in the U.S. is great. Not at all. I'm not saying that at all. I think that what we're seeing today is very bad. Very, very bad. Historically, for what we saw in the past, this is just as bad as what we saw back in the 70s when we had the break of the gold standard. Unlimited QE, helicopter money, Janet Yellen back, as I said before, the likes of Bernie Sanders, taking control over the budget decisions. That's, where are we going here? So, that is not to say the situation here is good, but comparing that with other emerging markets, in my view, it's a little bit extreme.
So then where do you think it goes? So then do you, if you don't think that there is a ultimate destruction of currency, or say the dollar, and, not talking the next 12 months, but that's something that is on the horizon eventually, then do you think that we're always going to have some semblance of this financial system that exists now? There's a lot of talk about this great reset, and there's a lot of talk about new government digital currencies and things like that. Where do you fall in the camp on your personal views of how this plays itself out long term in our financial system? Do we still have some semblance of our dollar system for as long as you and I are alive, and it just becomes a greatly inflated but never hitting hyperinflation currency? Or do you believe that once it gets bad enough, if inflation, say, gets bad enough for a while, that the government, before it gets to a point of a collapse, that they come in and that's when they issue a new currency? What's your kind of views on that?
Yeah, that's a very long-term tough question to answer, but I'm going to try to answer for you. Because when the facts change, my opinion will change, especially regarding the political environment. I don't know if this is going to get to the levels that we saw in Brazil, for instance, when the car wash operation. I'm not sure if you heard of that, but things like that, of that nature of degree of corruption. Who knows if that happens? I'll change my view immediately, but to the degree that we're seeing today, it does not compare with anything like that. I think we're going to see is something similar to the 70s type of style inflation, 15, 20% inflation at some point. I'm not saying next year or next 3 years, but at some point, that is probably very likely. And if that happens, how do you value a tech company trading at 50, 60 times sales? You don't, it has to be valued differently now. And so a lot of things will change as that will get priced in the market. That's not all going to happen at once. It will all happen slowly, and the market will be the first one to be moving in front of those possibilities, those probabilities that begin to increase. So I think that's going to be one of the changes. But during the Great Depression, for instance, the one reason why we saw those problems on the streets of people really not being able to buy food and all that. Well, the big reason why we saw that was because at the time the argument was should we break the gold standard? Should we be printing money? That was the argument at the time. So can we go back to some sort of standard? Yes, I think we went too far to the other side this time, where where there is no fiscal prudence at all. There's no discipline. Since the 70s, we've been growing more debt than GDP. Matter of fact, since the global financial crisis, we took that to another whole level, and then the pandemic came in. We took it to a whole new level compared to the global financial crisis. That is not sustainable. And if it is, I think that what's going to happen here is that we're going to go back to some sort of standard. I don't know what it is, but economies worldwide will begin to really care about international reserves, quality international reserves. What does that mean? Is that, are they, will the PBOC, the BOJ, the ECB, what are they going to own to back up their currencies in terms of, is it going to be, the treasury market? Is it going to be sovereign bonds, or is it going to be gold? Or is it going to be Bitcoin? Or is it going to be silver? I think it's going to be gold. I think gold is likely to be that type of asset that will throughout the decades and centuries has always been that type of asset that creates a more stability to a monetary system. So more and more, I think international reserves will become a bigger discussion here, and quality international reserves will probably translate into better currencies. That's the world I see going forward. Does it mean the Bitcoin will take the world and it will be the new currency system? I don't see that happening in the next 5 to 10 years either. So, but it's an interesting asset, and it's a very interesting asset to perhaps own. And anyways, but yeah, I don't see the end of perhaps, can we create a whole new currency? Sure, it's possible, but is this the end of fiat currencies? I don't think so. I think what's going to end is this weakness in international reserves and lack of assets backing a monetary system. I think I think we're very close to a big change in terms of that.
So basically, you're of the belief that we get some pretty tough inflation, but nothing too crazy. And the way because my next question was, well, how do you think they reel that back in, right? Before it was Volcker being able to, flip interest rates. I mean, you can't really do that without literally collapsing everything. So then my question was going to be, well, how do you reel that back in? What makes it not just continually go up and up and up and up and up? And then you kind of answered that for me as you continued, which was that you believe essentially a way that you are of the belief that they will restore a certain degree of public trust by having some form of a gold standard, even if it's just how countries ultimately store their savings or do their end of year trade balances. You believe that there'll be some form of a backing, but it sounds like you don't believe directly in the currency that you and I would be able to exchange, just some form of a non-exchangeable gold standard that restores a certain level of trust in the debts that are taking place.
Yeah, no, I think I think you described it very well. And I would also say that there's another thing that changes, and
I'm sorry I'm grilling you on it, but I always love to end on people's futures because it's what I'm most interested in, what brought me to gold was the future, my views on the future, my concerns with the future, and the fact that I believe the future is going to look very different than how the last 10 years are. And so I always love to end, with people like yourself that are so much research, and you're thinking, you're basically a professional thinker and researcher. And so I love to hear how you see it playing out, and I think it's valuable for a lot of people with their convictions and their investments too when they hear it.
Yeah, and I think it starts when the Main Street begins to realize the value of currencies, and it's catching up to them. Now look at Bitcoin. The Bitcoin narrative is getting there, and it's interesting because it is different than it was in 2017 when things kind of popped it seems similar in terms of the how it's moving, but I'm talking about Bitcoin now. But in my view, most cycles kind of fix themselves throughout the way. And what I mean by that, especially, what I said about the commodity space. Well, commodities, what's going to happen in my view is that as hard assets begin to increase in value, and let's just say, gold, silver, oil, what's going to happen is that miners are not going to be conservative anymore. This is going to become a bubble. It's pretty obvious to me that at some point happens too. Are we there? No, we're with the opposite side of that. But at some point you will, where everyone agrees with you that miners make money. And what happens is miners begin to pay themselves better, and they spend more money. They are not as conservative as they used to be. They're actually quite on the other side. They're very aggressive. And then what happens is, there's the commodity super cycle is over. They overspend on exploration. They overspend on discoveries. They overspend on everything. and guess what happens? And then now we have oversupply of commodities. That's not where we are today, but that's where what I envision at some point when things get out of control in terms of the hard assets. But I think that's the sort of the beginning. In the 70s, look at what happened back in the very, very end of the 70s and very beginning of the 80s. That's kind of what happened at the time. We had oversupply of a lot of commodities. So that created a disinflationary environment for decades. That is about to change in my view now, because we swing too much to one side. Agricultural commodities are in the same place as well, and I think all of that is about to change. So when we do have that, I think as we see investors buying into this hard assets of investment thesis, I think that then even the producers and all the companies involved in this market will be the ones that change the cycle in the future. That's just one way to answer your question.
Very interesting. Yeah, this is super interesting. So let me ask you, beginning of 2021, we've got January 15th today. Seems like we've got, the Democrats in control, Bernie running the helm on the budget. What do you expect to see in response price-wise for silver and gold by the end of 2021, say this time 2022, or just heading into the year here in 11 months?
Well, I'm going to guess, my guess would be nothing absurdly. And that's because for me, it's always a moving target, and I'm always more focused on the macro side than price targets. Right now, I'm extremely bullish and fully positioned in the mining space. And I think it was missing a few, some checks in terms of back in 2018 or so. I think it was missing a few macro indicators to really make this a more sustainable thesis going forward. I think we're there now. I don't know. I'm going to say, silver at sub $30 an ounce seems kind of ridiculous. And I don't think this is going to last. It's not only year end, but I think silver will take in the next 2 years or so its latest all-time highs levels. So we're going to see silver going up significantly here in the following years. And I'm saying 1 to 2 years horizon. In terms of gold, gold doesn't move as much as those as silver. So I'm guessing gold will have a move as well, perhaps above 3,000 or so. So adding another 1,000 to its price today. I think that's very possible. Now, I'm not so crazy about those. I'm not trying to create headlines and say, Tavi Costa said $15,000 for gold, or whatever. That's not my goal here. I think we're very focused in our models and our systematic models that help us to come up with and guide us in terms of creating the narratives and the developing this macro themes. And right now, it seems extremely bullish to me that we're at the beginning of a bull cycle for gold. Bull cycles usually last about 10 years, and we're probably in the very beginning of that. So, in my view, position yourself accordingly. I am already. So, things are about to change quite a lot. We have only one miner in the S&P 500. Now, one gold miner in the S&P 500. That is about a change in my view. Something I always say is the whole precious metals industry is worth about $600 billion. Apple's market cap is 3.5 times the size of the entire industry. So, even Bitcoin's market cap is now twice the size of pretty much twice the size of the precious metals industry now. So,
the miners of the precious metals miners.
Yeah, it's about $610 billion last time I checked.
Of the miners, got it.
Of the precious metals industry, 95% of those are miners, and there's some service businesses, but there's very small. 5% of that is an explorer part of the segment of the industry. About let's say, I think last time I checked, I think the top 10 miners account for about 60% of that. So, I think the entire industry is moving higher, but man, I think there's some businesses out there that should be worth a lot more than what they are today. We're dealing with, our goal is to be more on the explorer side, where, we're looking for companies that we can buy at 10, 15, $20 million market cap that we think that could be worth over $1 billion, depending on the gold market and depending on their success of exploring those properties. So, there is a lot of upside return wise. People say, well, there's only upside on, I hate buying gold because gold only goes up 20+% in a good year, and Bitcoin goes up, 200% in a good year, 300% in a good year. Look, those miners, that's not the big miners. As explorers is where you find that kind of upside potential, in my view. Obviously, they have a lot of risk attached to them as well. But for people that know how to navigate this market, Mike from Vizsla being one of them, this could be a great opportunity. So, there are plenty of ones out there that we believe that are good. We look at 3,000 companies or so, about 95% of them are not worth our investment. And the other 5%, 3% of that is about, there's so much ego. So you got to find the right type of company with the right team to really work with. So very tough, very selective names, very, very speculative part of the industry. But anyways, I'm just trying to say there's a lot of opportunities in the mining space, in my view, in the next year. I think as people believe in the thesis, they're going to start going up on the risk curve and look for the miners. And the first one would be the top miners. And the other ones, we're going to start seeing a supply curve problem here in among the big miners. And a lot of investors, a lot of the big miners will be looking for deposits to expand their production. I think that's where the opportunity is ahead, is in the smaller names. And so I hope I answered your question, but I see a lot of opportunities, not a lot of, yes, there's a lot of problems in the economy, but gosh, there's so many great opportunities out there.
Exciting stuff. So let's end here. Last question. You mentioned supply, and, I failed to have someone on my show, a lot of people, but I failed to have someone that's really taken that seriously, the supply shortage, more with silver. I think Keith Neumeyer, is only, the only guy that's really talked about that, and he has said that the CEO of Samsung or the board of Samsung specifically told, or essentially said that they are terrified of the supply shortage. We had another 6-7% drop in supply this last year. I was looking at a graph, and it looks like this was the lowest since 2011 or so in terms of the ounces mined. Do you give much credence to, maybe more in the silver market? Let's talk silver specifically. Do you give much credence to a supply shortage, or do you think there's still so much oversupply that, we won't really get something too bad?
So yes, the more I digged into this situation, what I found was that, yes, there was the macro imbalances create the demand, first and foremost, for precious metals, and silver being specifically to your question. But the supply side is huge. I mean, it's a huge part of the thesis, and mean not huge because there's a lot of supply, huge because the argument is so great to bullish for silver. So it's probably, I've said this before, perhaps the largest supply and demand mismatch we've had in history of gold and silver. Specifically with silver, it being an industrial metal and all that, as it rises in prices, will become more and more of a monetary metal, in my view, as it will become expensive for companies to produce things in general with silver. But right now, at the prices that it is today, it certainly is more of an industrial and cyclical commodity, given that nature. But look at silver miners. It's very difficult to find data on silver miners because it's difficult to find actual pure silver miners out there. Therefore, I've done my best, and what I found is that CapEx is still down about close to 30% on a year-over-year basis. And I can't find a year in history where CapEx was down this much while silver prices was up about as much as it was last year. So those types of divergences that we're seeing are very critical for the market. And again, the economy hasn't even gone back to normal. And I'm not saying we'll be booming. I'm just saying back to normal. When we see industrial capacity back to actual historical average, I don't think we have enough supply of commodities in general for too many years. So in the market, the market's not going to wait for that. The market's going to move ahead of that. So we are seeing a lot of issues in terms of that in the silver market. And I think it's the time to begin to look for those properties. Looking for discoveries in silver. It's been dismal in the last decade or so. Our focus has been, we have a property in Bolivia, polymetallic deposit that has a lot of silver, and we're very excited about that. But there's very few deposits that you can find nowadays that have enough silver to perhaps help on the supply shortage problem. So Keith is right, and I think that with the increase in demand that we're seeing recently, not so much as actually through the industrial side of the demand is just unavoidable given where we're going with the green path that we're in here now, seeing that with electrifying worldwide, what we're seeing even with copper too. We're not seeing enough discoveries, and I think we're going to have a lot of issues in terms of that. And owning silver today, that's why it's important to step back on days like today when silver goes down, 5%, 9%, whatever that is. Forget about that. It's time for you to be looking at the next few years and saying, there is an issue on the demand, an issue on the macro side that creates a demand for those hard assets, especially silver, that has been part of the monetary system for so many centuries. But also there's a supply problem, and that supply problem may be the biggest driver for silver in the following years. I think there's a big case for that. And unfortunately, a lot of investors that talk about gold and silver talk about the old economy. Well, guess who's going to supply the new economy is silver, number one, and is almost every other commodity in the world will be doing the same. And that's going to change margins of companies. That's going to change the price of consumer goods and services. It will change completely the whole macro environment as we get into this new world. Or it's not new because we've seen it in the past, but it's new for the last 30 years of Americans not seeing inflationary forces going up at all during this period. So it's going to be quite interesting times in my view.
All right, I'll take it. That's I fall in that camp, and I think it's something that is overlooked a lot. So I'll take your answer with some excitement. Last question: what's one thing you are grateful or excited about right now in your life?
Wow, that's a good question. Gosh, I'm grateful for my for having good health, having good health during this time, and being able to be close to the people I love. And I'm very grateful for that, and being able to spend time with the people I love. I was just in Brazil now for about 2 weeks, and very grateful for having a strong support, personally speaking, from family and friends. And I'm very, very grateful for that. I think that puts me in a spot to perform at my best at my profession. And I'm very, very happy, personally speaking.
Awesome, Tavi. Well, thank you very much for everyone listening. Please make sure you hit the like button on either side. Crescat Capital website in the description right there down below. You'll see that. Check it out. And for everyone that has other questions we missed, feel free to leave them in the comments down below. And we'll have Tavi back on again this year, and we can go back and pull some of those questions. So thanks for coming on, Tavi.